Ever wonder why millennials seem to shy away from real estate investment? Well, let's dive into that question and unravel some of the common misconceptions that might be holding them back. First off, there's this idea that real estate investment requires a vast pile of cash. Now, don't get me wrong, having a bit of a nest egg doesn't hurt, but it's not a prerequisite. There are plenty of options for those just starting out, like a small down payment for a starter home or even investing in real estate investment trusts, which require considerably less capital. So while it's true that you need some money to get started, it's not like you need to be Scrooge McDuck swimming in a vault of gold coins. Next up, we have the perception of risk. Many millennials view real estate as a risky venture, fraught with hidden costs and potential pitfalls. While there is always some risk involved in any investment, real estate is actually one of the safest bets you can make. Property values tend to increase over time, and even if they don't, you're still left with a tangible asset. You can't say the same for that hot new tech stock, which could leave you with nothing more than a fancy ticker symbol and a sense of regret. Lastly, there's this notion that real estate is a game for the older, more established folks. Well, let's debunk that myth right now. There's no age requirement to buy property. If you're responsible, willing to do your homework, and have a steady income, you're ready to jump into the world of real estate. But in reality, real estate investment is quite accessible and can be a smart move for millennials. Let's discover why. So strap in, because we're about to embark on a journey that can turn your financial dreams into reality. So why should millennials consider real estate investment? Well, the reasons are plenty. Let's delve into some of them, shall we? First up, we have passive income. Real estate investment can act as a steady stream of income flowing into your bank account without you having to lift a finger. Picture this. You're lounging on a beach, sipping a cocktail, and your rental property is hard at work, making money for you. Sounds like a dream, doesn't it? But with real estate investment, this dream can become a reality. Next, let's talk about appreciation. Real estate properties tend to increase in value over time. This means that if you buy a property now, it could be worth significantly more in the future. It's like a magic money growing tree, only it's a house and it's not magic, it's just smart investing. And then there are the tax benefits. Investing in real estate can offer numerous tax deductions, including mortgage interest, property taxes, and operating expenses. It's like having a secret weapon against the taxman, and who doesn't love a good tax break? Another advantage of real estate investment is the diversification of your investment portfolio. Putting all your eggs in one basket is never a good idea, and real estate investment offers a tangible asset that can balance out your other investments. It's like having a safety net, except this net is made of bricks and mortar. In addition to all these perks, real estate investment can provide financial security and independence. It can be a stepping stone towards achieving your financial goals, whether it's buying a dream car, starting your own business, or even retiring early. It's like having your own personal finance superhero ready to swoop in and save the day. With all these benefits, real estate investment is definitely worth considering, isn't it? But remember, like any investment, real estate also comes with its own set of risks. And it always pays to do your homework before diving in. After all, even superheroes need a good strategy. Ready to get started with real estate investment? Here's how. First things first, you've got to start saving for a down payment. This isn't your regular piggy bank savings, we're talking about a sizable amount. Most lenders typically require a down payment of 20 to 25% for investment properties. Yes, you heard it right. It's not a walk in the park, but it's the first crucial step towards becoming a real estate investor. While you're working on saving that down payment, do some market research. Understand the type of properties that are in demand, the locations that are hot, and the ones that are not. Get to know the average rent in the areas you're interested in and how much properties are selling for. This will give you a good idea of what kind of return you could expect on your investment. Next, it's time to find a good property. You're not just looking for any old house or apartment, but rather a property that has potential. This could be a fixer-upper that you can renovate and sell for a profit, or a property in a great location that you can rent out. Don't rush this process. Take the time to find the right property that fits your budget and your investment goals. Once you've found your ideal property, you need to secure a mortgage. This can be a complex process, so it's worth seeking advice from a mortgage broker or a financial advisor. They can help you navigate the sea of interest rates, loan terms, and repayment schedules. Lastly, once you've bought the property, you need to manage it. If you're renting it out, this means finding tenants, collecting rent and handling maintenance. If you're selling it, this means marketing the property and negotiating the sale. Real estate investment might seem daunting at first, but by breaking it down into manageable steps, it becomes a lot more approachable. So don't be afraid to take that leap into the world of property investment. After all, every great journey begins with a single step. Want to make your real estate investment a success? Here are some tips. Firstly, consider investing in a property manager. For those unfamiliar, a property manager is a third party who is hired to handle the daily operations of a real estate investment. They can manage all sorts of properties, from single-family homes to large apartment complexes. A good property manager can be a real lifesaver, especially when you're just starting out or if you're juggling multiple properties. They can take care of everything from tenant screening and rent collection to maintenance and repairs. It's like having a dedicated personal assistant for your property. Secondly, understanding the local market is crucial. Real estate is all about location, location, location. And to truly understand a location, you need to become an expert on the local market. What are the average rent prices? What's the vacancy rate? What amenities are nearby? These are all factors that can affect the value of your investment. So, do your homework. It might seem like a lot, but it's worth it. Thirdly, be patient. Real estate investment is not a get-rich-quick scheme. It's a long-term commitment that requires time and perseverance. It's not uncommon for real estate investors to wait several years before they start seeing significant returns, so don't expect instant gratification. Instead, focus on the long-term potential. Lastly, never stop learning about real estate. The real estate market is constantly changing, and staying on top of these changes is key to your success. Attend seminars, read books, join real estate investment clubs, surround yourself with people who know more than you do. After all, knowledge is power. With these tips, you're well on your way to becoming a successful real estate investor. Let's wrap things up by summarizing the key points about real estate investment. We've debunked a few myths and misconceptions, haven't we? Real estate investment isn't a club for the elite or a labyrinth for the lost. It's a playing field that's accessible to everyone, including you millennials. We've established that real estate investment can be a lucrative venture, a stepping stone towards financial freedom. It's a tangible asset, a nest egg that can grow over time, providing you with a steady flow of income. But it's not a get-rich-quick scheme, nor is it a magical money tree. It requires a strategic approach, a keen understanding of the market, and a sprinkle of patience. Getting started with real estate investment isn't a Herculean task. It's about laying a solid foundation, understanding your financial capabilities, and setting realistic goals. It's about doing your homework, researching the market, and identifying potential opportunities. Remember, knowledge is power, and power can open doors to a world of opportunities. And of course, we've shared a few tips for successful real estate investment. Don't be a lone wolf in the world of real estate. Build a network, collaborate, learn from others, diversify your portfolio. Don't put all your eggs in one basket. And most importantly, keep your emotions in check. Real estate investment is a business, not a love affair. A property might be aesthetically pleasing, but if it doesn't add value to your portfolio, it's not worth the investment. In conclusion, real estate investment is a journey, not a sprint. It's a marathon that requires endurance, resilience, and a dash of optimism. It's a game of chess, not checkers. You need to think a few steps ahead, anticipate challenges, and make calculated moves. Remember, real estate investment isn't just for the old and wealthy. Millennials too can harness its benefits and secure their financial future. Start your real estate investment journey today, and don't forget to like, comment, and share this to your friends and family so they can start their journeys as well. If you enjoy this content, be sure to subscribe as we post daily.